This is the part of the show now where I talk a bit about what I believe is important for individual investors to consider before they make their investment decisions over the next 5 to 10 business days. I want to touch on a few things. I want to talk a bit about the Fed. The Fed is about to raise interest rates, I guess, in a few hours. What does that mean for the markets? I want to talk a bit about corporate earnings. How have they been so far? And what can you expect over the next few days when we see some big names like Apple and Amazon report earnings? And lastly, economic data. We've already seen some economic data, or we received some economic data out of the US earlier this week. The biggest, piece of data is yet to come, which is Thursday, when they're going to report GDP numbers. What is important about that, and what should we expect, or how will it affect individual investors? So let's take the first one. The Federal Reserve is going to report, or at least make an announcement at just after 2 o'clock. They're anticipated to raise rates about 75 basis points. That's what we thought here in Canada when the Bank of Canada last had their meeting. Could they surprise us with a full percentage point increase? I'm not sure. I think the markets are betting more so that they're going to go 75 basis points. And if they do, perhaps the market will take that in stride versus raising more than expected. I think overall, I think that the Fed, whatever they say in their press conference after, is going to be probably judged more so than their actual announcement itself. Are they seeing inflationary pressures starting to abate? Will they see the inflation, or do they predict that inflation will start to slow down or cool off? I know we're seeing inflation cooling off, or at least some indicators telling us that inflation is cooling off in certain segments of the economy. So very interesting to see what the Fed says today at 2 p.m. Corporate earnings. Corporate earnings season has kicked off, and in my opinion, it's actually been better than expected. We've started to see some names on the Canadian side. We see CN Rail, Rogers, Shopify, slightly disappointing, although stock is up today. We've seen in the US, we've seen bank earnings. We've now started to see some of the biggest tech names, Google, Microsoft, Netflix, and really the results have been mixed. I think the most important takeaway for me is that when we do see a bit of a miss, like we saw last night with Microsoft and Google, or Alphabet, I guess as it's properly called, stock market actually is not selling off. If we would have seen these misses in quarterly earnings back in March or in April, you probably would have seen the stock drop 10, 15%. Yet we're not seeing that now. And in fact, Microsoft and Alphabet, or Google, were actually higher this morning after they reported earnings. JP Morgan had what I thought was a very soft report, and their stock, I think, fell 1-2% only. So perhaps we are closer to a bottom in the stock market with these individual names than we are anywhere near a top. And so maybe this is a time where individual investors should start looking for some of these names on the cheap. And I've talked a bit about this in some of the places I've spoken, whether it's BNN or other places like that. I think we are closer to a bottom than perhaps many people will give credit for. So let's continue to look at corporate earnings going forward, especially this Thursday when we hear from Amazon and Apple. Lastly, the third topic is economic data. As I mentioned, we've already received a lot of the economic data for the week out of the US. We're going to receive on Friday some income and spending numbers, which is, I think, key. But most important, we're going to get a GDP number. Now, the first quarter in the US was the first negative quarter. And if we were to see a second back-to-back negative quarter for GDP or growth out of the US, that would tell us that we are officially in a recession, because that's the definition of a recession. We saw some economic data in the US this morning, and that leads me to believe that we may skirt by and not have a negative number in the second quarter, and therefore not be in a recession. But it'll be very interesting to see what they report on Thursday. When we get that GDP data, if indeed the US is in a recession, will the Federal Reserve continue to increase interest rates as aggressively as it has, knowing that the country is in a recession? We'll have to stay tuned and watch for that number.